let's talk about the infamous trading technique. I'll let you start.
Okay, I'll start with a story then.
Yep.
Shall I? So I heard this story literally just a few weeks ago, and this trader knows what he's doing. This is not some beginner trader. This is someone who's actually been around. Well, he's had 4 years of profitable trading. Good. I mean, we're talking making 50 to 100% per year on his personal accounts. And so you'd think, he knows what he's doing. He's devised a system and thought he knew how to crack the markets. This is the problem when people go down that systematic approach. They think they've got in some holy grail. We'll talk about that in a second. And the system uses martingale. So this is the crux of the discussion point here. So martingale techniques are when you get in here, you don't use a stop loss, so you buy here. If the market comes down against you, buy again, and if it then comes, you brought your average price down. So then if the market then comes up, then you get back into profit quicker. And if it comes down some more, you buy some more, and so on and so forth. It's a bit like, if you go into and you play roulette, and you put it all on black and you lose the first time, you put twice as much on the second, and you just banking on the fact that black will come up at some point. So red might come up 5 times in a row, but if you keep doubling, you'll get your money back. Sort of thing. It's that type of thing. And anyway, so he obviously had systemized this, and like I said, it had been making money for 4 years, and then blew his entire account up in the space of a month in September on the pound, the move in the pound, because he had devised a system based on previous price action, and that had worked fine. But there's these things called black swan events, aren't there? And they come along, and they come along a lot more frequently than we think. And you're going to talk about that in a second. And that came along, and his whole system got blown up. And essentially, it comes back to risk management. If you're essentially not using stops, and a lot of the time these sort of techniques will come back for you, but you're setting yourself up for failure at some point. It's going to blow up.
I think the just to highlight the fact that I think the thing that's come out to me listening to that is that the guy was profitable and consistent. He's a smart trader, but it's very easy to get caught up in the idea of creating a system that essentially beats the market, or is the holy grail, or allows you more freedom, so you're not in front of your screens as much. And I think the thing with martingale is I know of horror stories where she was a property investor, this lady, and she had a group of property investors that she taught, and she actually she diversified into trading, got them all trading this strategy because she was making all this money, and the same thing happened to a group of 200 people. So it's not something new. But what's interesting is it doesn't just affect people who are naive or have never traded or don't understand. It actually, because it's almost intellectually stimulating, because it's the idea of, well, I can crunch a whole set of numbers, I can go back over all of the data, and it says the worst losing run in the last 5 years was 6 trades in one go, and there were 7 episodes of 4 losing trades. So you can get all finite and calculate it out, and then along comes the black swan event, which, as you said, happen more often than people realize. And that happens right at the point when and then suddenly all your numbers mean nothing, because you've relied on past market performance as a definitive, but then taking your stops out of the system. Now, for me, that doesn't mean looking at historical data isn't relevant, but making big assumptions and taking big risks like that based on what has happened in the past, well, it's a scary thing. But the ease in which people buy into these types of things. And the other thing is the amount of people that actually do it. When you delve into what they actually trade, a lot of them are doing it.
It's why we said at the beginning, you said at the beginning, this is a popular trading strategy, because it serves as a way of feeding people's desire to be right and have high win rates, and not having to accept losses, because they just keep on adding in until it comes back, even if they get out at break even or whatever. So it feeds a lot of our natural desires as human beings getting into trading. We don't want to lose and all of that. So it does that. There was a book called, you've read it, The Hour Between Dog and Wolf. And in that book, great book, and they did a lot of research onto in-bank traders at the time. I mean, the book's, I don't know, 10 years old. So, and then the research was done before that. So, and bank traders by default are trading the bank's money. So they're not going to caress it and look after it in the same way it might do their own.
Exactly, yeah.
They want to earn their big bonuses. So they were taking big risks. Now, this is slightly different to what we're just talking about, but it's the same thing. If you're martingaling, you are taking big risks. Doesn't matter how small your early positions are, you're going to get bigger as it comes down against you. So these bank traders, they were making massive profits, but they were taking big risks. And there wasn't a single instance, once you got up to like 5 years or so, where any of those traders who took big risks didn't blow up. So what's the point in making great money today or this year or even over the next 2 years if at some point the market's going to come and get you because of that type of risk that you're taking? What is the point? And that's our point.
I think that's very true. And in the book, they talk a lot about how those bank traders became conditioned to the result they were getting. And I think what can happen with martingale is that people go into shock because it's the one time that they've had 9 losers instead of the predictable 5 or 6, and they go the complete opposite way because they've got used to having it all work, but then suddenly it all goes wrong. So I think it's a really important thing to stay away from.